Hello everybody, welcome back. Let's have a look at Bitcoin, just focus on Bitcoin on this video and we'll look at some of our all-time favourites throughout the day, I suppose. So yeah, it's been a constant uptrend since this signal was generated, giving it that push up, which then created another signal in the Itchy Cloud, which is a continuation of trend. Now, you know, you've probably heard me talk about it before, but the way that this trend, and again, this is just a 4-hourly, but good things take place in a 4-hourly. If we go back in time, you know, if we got the death cross, we play these death crosses, for instance, on 4-hourlies. That was your exit point, or that was your short signal, and since then, it would have yielded a, let's just give it, we'll be conservative and measure it from the bottom. From the bottom to the bottom, that's 41% move, again, you know, based on a 4-hourly signal. So what we've got now is the inverse of this taking place. It's not happened yet, but it looks like it'll probably happen maybe even towards the end of the day, which is a golden cross here forming on the 4-hourly. So because we've got this continuation of trend generated from the signal that was formed on this cross at this price, 41,400 give or take, we've got a CME gap around 40,600, which is also where this golden cross appears to be brewing. That's likely to be roughly where it's going to take place, give or take a few $100s if it's going to happen. Obviously it might not happen. So we've got massive support down of about, we'll call it 40,500, just as a ballpark area. It's not exact, but it's a rough kind of zone. And like I say, you know, we've got a lot of support even below us at the moment. On the 4-hour, we've got a 10 exponential. We're finding a nice little bit of support there. Bollinger Band and the 21 exponential, which is coming in at this moment around 42,500. And then the 200 exponential and the 50 exponential and the CME gap, plus a horizontal level of support here, all coming in at that major area. So, I mean, it might not happen today, and because we're looking at the chart, to be honest with you, it's having a pullback after this nice big rally. We're not particularly overextended on the money flow index. We are turning down a little bit on the histogram on the MACD, but there's no bearish divergence forming on it yet. I think it's inevitable that it will. So this could mean that we move up further before we come back down, and when we do come down, we come down to this golden cross. That's really common. It's extremely common, to be honest with you. We always see golden crosses, and when we're doing the live streams and stuff, we see these coming obviously in a more bullish environment than what we've been going through recently. But when we see these golden crosses, we're like, okay, that's good. It is good. It's a good sign. It's not a signal in itself, and it's a good sign of strength brewing, because basically what you want to see is moving averages all in the appropriate places. So we've got almost that now on the 4-hourly. So we've got the 10, 20, and then obviously we'll have a 50 above a 200 there. So they're the main things for me. They're the main moving averages that I'd use, and they would all be in the appropriate place. I call it a rainbow spread, just because they're all different colours, you know. I have my own terminology. So yeah, we're looking to get that rainbow spread, and in order to do that, we do need the golden cross. And so what is very common to see happen is we'll get the golden cross, and then we'll dump down into it, which is kind of normal. It's I don't have a statistic for you, but it's more common than not that we do that. And it's actually quite bullish, because what the price action is doing is testing that area of support. It needs to dump, it doesn't need to, but it dumps down into it to see if it can hold. And if it does hold, that's usually the best entry point. A lot of people think of a golden cross as like a signal. They go, oh, we've golden crossed, let's go long. Ah, wreckage. And then that's the opportunity at that point usually. That the big moves take place. So we look like we've got one of these incoming. It's not happened yet, and when we get it, we should expect a retest of it. And actually, that would be the perfect play for Bitcoin here. Again, you know, it doesn't have to work out, but it would be a really, really good setup to try, at least, because first of all, you've got a horizontal level of support, you've got two major moving averages that have just golden crossed, then you've also got the CME gap all coming in at this particular area, 40,500 thereabouts. So if there was ever an opportunity to try, you know, a long position, which is something I wouldn't really try and persuade anybody to do if they're not used to doing it. But I mean, as far as I'm concerned, you know, that is the time, that is the place to do it. And me personally, just with this setup right now, I've already set up a long position to be triggered at that level. Now obviously when you're doing crazy stuff like that, you need to obviously have your risk management employed, and you also want to have they don't have massive leverage. So a 2x leveraged position for me to take place around 40,600 is where mine is. Might not be the perfect entry point, and then exit would be 39,000. That would be my risk to reward. So I mean, that's my personal setup. Again, it doesn't have to happen, but this is the way that I think is most likely to happen. Now, like I said, we might move up beyond this today. I mean, the 10 exponential on the 4 hourly is holding up already, and we don't have any kind of negative or bearish divergence in any form, really, on the smaller term time frames. We do have a little bit of hidden bearish divergence forming on the daily, which is okay. I mean, that's fine. The daily doesn't look in any way ready to break out and go crazy or anything like that. But the 4 hourly is brewing some kind of signal down there at the moment, which could lead to a decent opportunity. So Bitcoin looking all right. To be honest with you, can't really complain with that. It's looking all right. But again, even with the hidden bearish divergence, we've got a massive RSI breakout here. We've got a breakout, a retest, and then off and away. The money flow index is rising quite high, but it's still in comfort zones. So this does mean, to be honest with you, and also we've got the MACD crossing into the 0 point with ticking histograms moving up every single day now. So there is still power on the bulls perspective, but the limit, I would imagine, the limit would be about 46,500. It's a horizontal level of what used to be support, and it was a breakdown zone. We've also got a 200 exponential on the daily just hovering just above it. So it does to me look like this would be the limit for this particular move. But again, anything could happen, but that is the most likely scenario. So bullish on still on the short-term time frames, with a possibility of a move up and a rejection down to this area here. So it is a big move down, definitely. And I know I'm talking about longs. We could also be talking about shorts. To be honest with you, that would be a 12% move from the top down to the bottom. And then who knows? This could break. I mean, that would be enough to scare a lot of people out of the market and sell their positions and maybe not get back in, because I suppose in the grand scheme of things, if we're looking at things on like a weekly, for instance, still pretty bearish. Like, it doesn't look particularly good on the weekly. We have to reclaim all these levels that we're talking about, and then the 20 weekly, which is all the way up above. It's 51,000 more or less, before we can entertain the idea of an actual bullish continuation up to new all-time highs. But it doesn't mean that we can't go long. But you can also go short. At the moment, it's still. I would suppose the bears have still got a grasp on the larger time frames, like the weekly and the daily. But the bulls are definitely winning all these skirmishes on the short-term time frames, and look like they will continue to do that. Maybe for a smaller amount of time. Again, you're talking about a 4 hourly chart. We can't expect these signals and crosses to have a massive effect on the on the long term time frames until we start to reclaim some of these major areas on the daily and then on the weekly. Once we've reclaimed that 20 weekly, it's at that stage where the bulls have pretty much every single thing in their favour, and a full-on reversal is almost at that stage inevitable. But for the moment, we can't really entertain the idea of a full-on reversal, and I'm not really looking for a full reversal until the first rate hike in March. I think that's going to have a shock in all markets anyway, because of the way that the dollar looks. The dollar's looking pretty sad over here. Yeah, here we go. So the dollar's looking pretty sad, and you might think, well, actually, why is if the chart's looking sad and bearish, surely your expectation should be sad and bearish. I mean, it is bearish as opposed to the very short-term time frames. What we see here is a massive retrace, a bearish engulfing candle here, coming down to the 20 weekly. But 20 weekly is held, and it's held again here. And actually, if you think about the nature of the dollar, it's highly manipulated by default. I mean, that is the nature of having the Federal Reserve and doing what they do to manipulate the way that the currency moves. That's normal. That's normal for fiat currency. That's how it works. So this chart is still bullish, on the weekly. And when we see a move like this with tapering down the line coming anytime in the next few weeks, basically it's in March, then I would say unless this chart actually begins to recover on its own, which it might do, because again we're still above the 20 weekly, then it could easily start to recover on its own. If it doesn't, we should feel the full force of the Federal Reserve, maybe pushing up 50 basis points on their first rate hike, which is, that's open to interpretation. They've not mentioned how much it's going to be, but with a move like that, which took place extremely quickly, you know, if I was sitting in their chair, if I was around that table, and I was thinking about what inflation could do to the country and the world, effectively, as the dollar's the world's reserve currency, I'd be thinking, look, let's do it, okay? The stocks and everything has had a great time. They'll still be up. They can sustain some further downside. Let's just do it, okay? Let's get this, nip it in the bloody bud. And I think that's what they're likely to do. But again, all of that is yet to be decided. I think the vast majority of this rate hike has been priced into all markets. And you think Bitcoin looks bad, you know, some stocks are a lot worse than this. They've retraced by a larger amount than Bitcoin, which is why I keep reiterating that this isn't a Bitcoin or a crypto winter or a bear market. This is extremely tied into the economy, and actually when you look at them and you measure them from the tops to the bottoms, Bitcoin is not the worst affected. We were looking at things like PayPal, Snapchat, even Facebook. They're all absolutely wrecked. Worse than Bitcoin. They've retraced further from their top to their bottom than Bitcoin. So it's not as bad as you might think. And again, this is directly related to economic factors that are not seen in the chart, although we can work out a lot of why this has actually happened, right? So since this breakdown here, I mean, it's definitely been a fundamental basis. We had the virus kick in around here, and then we had the I suppose the continuation of inflation reports and Federal Reserve talking all this stuff. So it's not a crypto bear market, although it has been a prolonged downtrend. This is no big deal. We've seen things like this in the past. 2019 is the year I often refer to as the most similar kind of situation. We had a nice big run up at the beginning of the bull market, and then we had a 6-month consolidation to the tune of about 50%. So things are a lot more volatile with crypto these days. More money coming in, more money coming out. Obviously Tether makes things a lot faster to see pullbacks and dumps and crashes and stuff like that, but it's not a crypto bear market. Okay, I stick with that. But again, while we're looking at the longer term time frames, daily and weekly, bears still have control. I have to say they definitely still have control. So in a nutshell, that's what I'm looking for. Either a breakdown to the CME gap from right now, or a push up for a final hoorah up to about 46,500, and then a pullback down to these zones. And it's here where I'd entertain a long. You could also think about a short over here. But while we're surfing this area, unless you already made your move on Bitcoin, you know, at these lower levels, then I would leave it and wait for these areas to be hit and see what reaction we get from them. I think would be definitely a pretty top heavy and a very very likely possibility of a rejection around here, just as I think we'd have a very good support around here. So obviously being in the middle of that is a no man's land, no trade zone. Right, I'll leave it with you there, guys. Thanks for watching. Hope you have a nice day. Take it easy.